Good morning, guys, and welcome to today's edition of the London Session Open. Today is December 18th, 2019, and it's 11:05 a.m. in London when I'm doing this market update. And doing it slightly later today because it's my first day back in London after a few days off, so I wasn't able to go live as I wanted at 9:30 a.m. But we'll be back live tomorrow and also on Friday. And then, as you know, it's the holiday period, so I'm gonna be away for a few days, but we should be here as well on the 23rd, if I remember correctly. Now, we're going to take a look at the markets, and we're going to begin with the euro, which is down by about 15 pips today. And my overall view has been to be bullish from these levels. And the last view I shared with you guys was to be bullish for the market to head to the upside, which it did. Didn't go all the way up, but it did decent move. And today, when we're looking at this, I think we probably still gonna go up a bit, but I was thinking this morning I'm probably gonna go a little bit lower, and I'm gonna stick with that view over the next 24 hours. So the idea would be to be bullish from 111.20 or so with stops below 110.95. Now this is GBPUSD. So as you know, we had that strong move, right? Because now the market finally had UK Parliament with the Conservatives having their majority, which we did not have before. But as you know, over the last 2 days or so, the Conservatives are going to put forward a motion, which a new law really, which is going to forbid extensions beyond 2020, because the withdrawal agreement and the exiting from the EU ends on January 31st next year. Now, they then have about 11 months to negotiate the future arrangement. And what's happening here is that before the end of the year, that needs to be concluded. We'll see how that works out. It usually takes about 7 years to do these kind of things. So, I'm not sure how they're going to do it in 11. But they will probably have some sort of deal. So it's going to be more of a hard Brexit, I think, than what people anticipated. And there's still a risk that we can have a no deal Brexit, which effectively means there's no deal. And then there's just like the very basic rules from the World Trade Organization kicking in. And that is why the financial markets decided to sell off the pound. Now, technically here, the market did slip and slip far more than I thought it would do because of that news, which, you know, I didn't think they were going to put it into law. So it's a bit, I think no one really thought so, because the market wouldn't have been up here if they thought that they were going to go through with something like that. So what can we do about this then? Well, I think we can still swing to the upside because the trend is technically still bullish about 130.47. And I think it's okay to be bullish from these levels, which is pretty much 131.07, and target maybe 132, 132.50. And I think if people that did buy here, when we do swing to the upside, they're probably going to try to offload those long positions. If you look at things like dollar versus the Japanese yen, as you might remember, the last day was the buy down here for the market to head to the upside. That made sense. And since then, I've been saying, look for a decline down to 109.05. If that happens, people probably going to buy here, target 110.40. The alternative is just take out the 109.72 and we'll go upwards. But I would be a bit careful with that. It's just the last 2 weeks of the year. It should be quiet. In fact, it will probably be quiet in the first week of the new year as well. So it could easily be maybe go up a little bit, you get like a false move, and then we'll probably go lower. Other stuff we're watching is the price of crude oil. So crude oil is doing good. You know, it's moving along this channel. And the last very good setup I shared with you guys was just to buy down here. That worked out fine. And then we talked about buying, I think, dips, I think it was here. And we definitely turn bullish over here. And what I'm doing here is I'm just waiting for that correction, because you have that channel, and that channel is limiting price. And I will insist to be bullish from much lower levels at 56.19. Now there's an alternative, which is that this channel might now be over. We might not have that channel anymore. And what might happen here is maybe this has changed its pace to the upside, even though I think it hasn't. I mean, if we just take a step back here, we still have some major highs here, and it's more of a range bound market than anything. But what might happen here is that we might be again changed the pace a bit, and maybe we'll never revisit these levels. And if you believe so, then we need to focus on 57.68. and then maybe just turning bullish from 59.43, 59. So you treat this as a trend defining level, then it'll go up and do like that. Gold prices as well. I talked about buying here over the last few days, and I'm sticking with that. I also said a break to 1449.76 would turn things bearish, and that's what I'm looking for as well. But for now, we have this little channel that is working rather good for this market, and there's no real change here. We'll see what happens after that. We at the same time we do have this big channel here, so I guess if we take out this level here, it could be the beginning to the end of this limiting price action here, and maybe it will start to trend upwards again. S&P 500. So the trend remains firmly bullish. So you know, when the price took out that high here, I turned bullish again, and the market went all the way up, and it's really strong now. And because it's a low liquidity time now, there's not too much activity, and you know, I think, as I've been saying before, we really need a pullback, maybe to 3156.4, and from here I think that would be more sense to get involved with stops just below 31,000 or 3,100. As for the German DAX, we went down to the buy area, so we reached 13,207, which is my buy area, and I think that's a little bit, I think we did correct, a little bit more than 50%. And again, if we revisit this, I think people are gonna buy, and they're probably gonna lift the price towards the all-time high, which is 1,000 or 13,605. We're also working with this massive inverse head and shoulders, so it's a big head, big left, big right shoulder, and you got the break here. We mentioned this in the past, and we still have that target at 13,776. Overall, in stock markets, and particularly S&P 500, I think this is where you want to be focusing on this year. And obviously, it's a very nice little channel, and we're obviously quite overbought. And it wouldn't surprise me at one point if we go down. We might even revisit something like the July highs from last year. So this is definitely what you want to keep you focused on right now. I just need to get involved at the right levels. If you want to know more about different markets and ideas for this year, go to investingcube.com, and here on the very top page you'll find our best trading ideas for 2020. You can read that article. It's free, you just need to register. You can also find it via the menu, via quarterly market forecasts. Actually, you will not find it here. Actually, I will need to add this to this little section here. Okay, guys, if you do have any questions for me, as you know, you can always reach out to me via Twitter at AlexFX00, and also WhatsApp. Have a great day, guys, and I'll see you guys tomorrow for the next update on the markets. Thank you, and bye-bye. Cheers.